Overman Group, and I am so excited. I'm in the office today with one of my favorite lenders in the triad, Kristin Reagan.
Hi guys.
Kristin, thanks so much for joining us today. We have been getting lots of questions from buyers in the market, whether they are first-time home buyers or just moving to the triad area. So we asked Kristin to join us to help us answer some of those questions for you.
Great.
Fantastic.
I'm excited to be here. Glad to get some answers out for the friends of ours.
Absolutely. So Kristin, one of the most common questions we get, because there's so much advertising out there from big lenders in the market nationally, is why should our buyers work with a local lender when there's so many national options out there?
Yeah, absolutely, and that's a really good question. A local lender offers a lot of opportunity for you to be able to have real personal service. A national lender a lot of times can hide behind a phone because generally they're not local. So you could, if you run into a snag, and we all know there's no shortage of snags in the area of mortgages, the lender can hide behind the phone, which is unfortunate because the communication breaks down. Whereas if you have a local lender, the agent themselves could actually go to that lender's office if they needed to, or the client. So the agent can't really hide, the loan officer can't really hide behind what's really happening.
Definitely, and that's one of the things I love about working with you, is I know I can pick up the phone and call you if we have a question, if a surprise comes up and we're not sure of the answer or which direction to take. You're always a great resource for us and our buyers.
That's right, because I mean, if you're using somebody in California, then you're at the mercy of that phone call too, and they don't have to answer. They can go 24, 48 hours without answering you, and you know, when communication counts, that can be a real problem. So communication is what counts the most in a mortgage.
Absolutely. Fantastic. So now we know why it's important to use a local lender. One of the things we've heard some of the national lenders telling our clients is don't go shop for other mortgage companies. Don't have your credit run again. You don't want to have that impact on your credit. And you and I both know that's not the case at all.
It's not.
So can you share with our buyers a little bit more about why that's not the case?
Yeah, absolutely. First of all, if your lender's telling you that, likely they're concerned about losing your business. So they may have something to hide, which I don't like. I think it's important for you to talk to a few lenders. This is where you're making the largest purchase of your life. And it's important for you to not only get a good deal, but to have somebody that you can work with and communicate well and that can get the transaction done in a timely manner for you. So you want to make sure you plan all those things into account when you're planning your mortgage. But often they will tell you that because of that fear. So the truth is that you're not penalized for shopping for a mortgage rate. I mean, obviously we want to make sure that you have the best deal that you can get. And the scoring system is not designed to penalize you for that. So you can have up to 3 credit inquiries in a 60-day time period without it affecting your score at all. Now that doesn't mean that your score may not change from lender to lender because of something else that's transpiring on your credit or something that's being reported. But from the inquiries themselves, they are not going to affect your credit score.
That's great. It's awesome to know that we can encourage our buyers to go shop for the lender that has, the best overall package for them.
That's right. Because
it's not necessarily the first person they're talking with.
That's right. It's not going to necessarily be the first person, and it may be, but they won't know. And the best thing to do is know that you're getting the best deal. So even if you talk to the first person and that turns out to be your best overall package, at least now you can settle that full transaction knowing that you've done your due diligence.
Definitely. So that said, when is the best time for a buyer to talk with a lender?
Immediately. We can't say fast enough. I like to use the analogy of if you're getting in your car to go to California and you don't know the way, then of course you're going to need assistance. And it's the same thing with buying a home. Whether you are thinking of buying in the next month or the next year, getting with a lender so that they can help you put a plan together to ensure that when you find that perfect home that you're ready. So immediately.
Now, we always encourage buyers to reach out right away from the start. The first time we speak with them on the phone, it's one of the first questions that we ask. And I understand that there's some hesitation, but have you ever had a buyer, that contacted you too late in the process and maybe they missed out on a home?
Absolutely. We have buyers that will wait and they will miss out, especially in this market that we're in right now. Sellers have a couple of buyers generally that are interested in their property. And if you're not fully prepared when you go in there to make that offer, then you could definitely miss out. And sometimes it's something that's really quick that we could have done in a week, but in this market, sometimes a week can really play a big difference in your offer.
All right, so we've talked to the buyer, we've put them in touch with you, you've had that initial conversation. Maybe they are 3 months out from purchasing, or maybe even 6 months out from purchasing, but they are starting to consider these different loan types that they're hearing of.
Yeah.
And we have a lot of folks that get excited about down payment assistance programs or 100% USDA purchases in the county. So tell us a little bit about the different loan types that you have available right now.
Yeah, absolutely. So there are a wide variety of loan types, and I always tell my borrower the best thing to do is to get an application to your lender, get an application to me so that I can take a look at it and give you all of your options. Sometimes a borrower will have one option, sometimes they'll have 3 or 4 options, and it's best for them to know what those options are specifically and have them spelled out to them in detail so they understand. There are, as Shaunna mentioned, there's down payment assistance programs that can help you with closing costs, down payment. There's the USDA, which offers 100%. VA offers 100%. We have a lot of veterans in this area, which we love to serve. They offer 100%. There's conventional loans with as little as 3% down, as much as you want to put down. There's jumbo financing, so if somebody wants to, buy in a higher price point, there's options for that. There's doctor loan programs, which are really strong. There is renovation loan. So if you find a home that's a perfect location, but maybe it needs a little bit more love, you could do some renovations on that. Construction loans. So you can just tell there's so many options available to buyers. So the best thing for them to do is get with somebody they feel comfortable with, that they're going to work with, that they trust, and that they like and they feel like they can do business with, and for them to provide their information so that that lender can tell them what their options are available.
What would you say is the most common loan that folks like to look at?
Yeah, so the most common is probably going to be between a conventional loan and an FHA loan. Those are the most flexible. FHA is going to have pretty flexible guidelines. It's going to depend on what their down payment options are and what their credit scores are as well, on which is going to be the best for them.
Fantastic.
Yeah.
All right, so let's say you've spoken with the buyer and you've gone over all loan types that are available to them. Now's the time that they need to consider whether they should be pre-qualified or pre-approved. Which do you recommend, and what's the difference?
Yeah, I love this question, and I love when buyers are actively understanding this. So as a lender, I don't have authority to decide a loan, make a decision on a loan, to approve a loan, if you will. However, I've got 23 years of experience, so generally I can look at a credit report, look at a borrower's application, and say, here's what you qualify for. So this is your pre-qualification. So I can give you a letter with your pre-qualification, and you can go out and spend time with your agent, and you can put a house off of the market. You can put down your earnest and due diligence money and take a home off the market. However, at the end of the day, all of your paperwork has got to go to the underwriter to truly be approved, okay? So when that loan paper gets to the underwriter, if something wasn't quite right on your application, or you can't verify something that you've provided to us, that could change your approval. Now, granted, you've already got money into this transaction, which means you want to make sure that you get your approval. So one of the things that we do as a lender, which I absolutely love, is we will take all of your paperwork from your application and we'll actually send it to that decision maker, which is the underwriter. They'll review everything and they'll give you a full approval. So now you have a full pre-approval versus a pre-qualification, which is more solid. Number one, it protects you before you take a home off of the market, so that you know that you're fully approved and that loan is going to be able to move forward. In addition to that, it also helps speed up that process, because we've already verified your assets, we've already verified your income, and that helps move that process along a lot quicker. In addition to that, especially in this market, we all know that there's multiple buyers sometimes for properties. If the seller knows that you're fully approved with the underwriter and we've already verified everything, and it's not just me as a lender giving you a pre-qualification letter, they're more out to accept your offer because you're a solid buyer. It almost makes you like a cash buyer at that point.
Absolutely. I know from the listing agent side, when we have multiple offer situations, we are always looking for cash buyers or buyers that are pre-approved, instead of considering buyers that are just pre-qualified that, unfortunately might have a misstep further down the road that they just don't see yet.
That's right. That's right. So it's important to get that information out there to the underwriter as fast as possible. That way there is no missteps and your approval is solid. And not all companies will do the full approvals on what we call is to be determined. So without the property. So it's important to work with a lender that offers that service to you.
Exactly. That's great.
Yeah.
All right. One of the things that we've been having more conversations about recently, especially when considering that national lenders are touting much lower interest rates, when we're actually looking at the fees to the buyer, we're seeing those lower interest rates are typically due to discount points. And a lot of buyers just don't have much knowledge about how exactly discount points work and whether they can do that with any lender, whether that's being a factor in the rate that they're quoted. But tell us a little bit about how we should consider discount points and what that really means for the buyer and what they can do with that.
Absolutely, that is a really good question that does deserve time spent on it for sure. So a discount point, and I always tell people, I'm like, be really careful just getting rates and just seeing the rate without understanding your closing costs, because I may tell you 3.5, another lender may tell you 3.375. My closing cost may be 5,000, theirs may be 8,000. So there's a cost associated generally when you see a big rate difference. All lenders are getting their rate from the same market. So if you're seeing something that's a big spread, generally there's a reason behind it. A discount point is when you're paying to discount your rate. And I did this example, I had this client just yesterday, so this is fresh in my head, of a $200,000 purchase. And they could get a 3.5% with no cost, so no additional cost to their closing costs. Or they could get a 3.375 with a 1% cost. So I calculated up what their payment difference was going to be. So for the 1/8 of a point difference in their rate, their payment is only $25. I think it's like $26 difference a month. So a meal out generally. But what the cost associated with that was $1,800. So when I take the $26 that you're saving monthly, and I take the $1,800 cost that it's costing you, it takes you 72 months to recoup that. I mean, that's 6 years. So how long do you plan on being in that home? The average American owns a mortgage for 7 years. Now, whether they are selling or whether they're refinancing, they just generally don't have the same mortgage for any longer than that. So if you're not going to have your mortgage for 10, 15, 20 years, then buying a discount point generally is not in your best interest. So it's important that your lender is explaining to you the cost associated with the rate that you're getting, and that you're actually really comparing apples to apples. And again, having somebody that you can, talk to about that understands what those costs are associated with it and help you to actually break it down is a really good thing to be looking at.
Definitely. And that's another one of the things that I was working with Kristin for, is she really breaks down the cost that the client is looking at. We've had clients that have been surprised by thousands of dollars in discount point buy downs that really they might not have needed or taken into consideration, $1,800 over 72 months. What does $5,000 in discount points look like? How long is it going to take to really recoup that cost?
Yeah, absolutely. And and for me as a lender, I'm more than happy to always look and help you compare apples to apples. If you truly have a better package somewhere else, this, Shaunna, I will tell your clients that that's truly a better package. It's uncommon because, like I say, we're all getting it from the same place. So it's just how it's being presented to the borrower. But to have somebody who's educated in it and can help you break it down and understand it, that we're happy to do that.
We appreciate that.
Absolutely.
All right. So we have talked about loan types, discount points, pre-qualifications, and pre-approvals. Let's say a buyer has moved forward with their pre-qualification or pre-approval, and they are getting ready to make an offer and move forward on a purchase. What are some of the things they should and should not be doing in the meantime?
Oh, yes, absolutely. So you should definitely maintain your job. If you not saying that you cannot change jobs, but it makes it very tricky. So if you're considering it, talk to your lender first, please. Don't put cash money into your account. We, by federal law, have to verify funds that are being deposited into your account. Cash is not traceable generally, so it can cause an issue during your transaction. Moving money around a lot can cause you a lot more paperwork, but you'd want to limit. You definitely want to make sure that you're paying your bills, so continue to pay those bills. A few things that you do not want to do, of course, is leaving your job or not paying your bills on time. You know, what else? What else would you not want to do? Let's
I
see.
think one of my favorites is remembering not to go buy a new vehicle or furniture for your new home. Which sometimes it seems like while we're buying a new home, we should just go get furniture to fill it up. Sometimes that has a little bit of an impact.
Oh my gosh, yes, that's probably one of the biggest ones for sure, Shaunna. So thank you for bringing that up. You definitely do not want to do anything that you're buying, or it's going to require your credit to be inquired on for sure. If it inquires or requires you to have a credit inquiry, say no. Just absolutely say no. But yeah, buying furniture is not. I get people who call me around holidays all the time. Well, there's a special for Labor Day and I want to go buy. Absolutely not. Don't buy anything.
Definitely.
Yeah.
That's one of our favorite reminders. If you are buying a new home, you've just gotten your pre-qualification or pre-approval, hold off until you have the keys to that home and the paperwork is signed before you go buy a new vehicle to celebrate or new furniture to put in your home right away.
Yes, because unfortunately we've seen people who have done that and then they're stuck with just their car to live in, and you don't want to do that.
Definitely. All right, Kristin, here is my last question for you because I am seeing this far more often than I have over the last 7 years. When we have people that are selling a home and buying a home, what should they take into consideration for their loan purposes during that process?
Yeah, so absolutely. You want to make sure that you're talking to your lender before you actually get your home on the market, because you want to make sure that you're qualifying for what you think you're qualifying for on your next purchase before you've already put your house out there. Because when you put your house out there, especially in this market, they generally seem to be moving fairly quickly, and so you want to make sure that you're prepared to be able to move forward with your new transaction.
Definitely. And as far as closing timeline, when maybe you have to sell that first home before you can close your loan on your new home, what do you typically recommend to buyers and sellers that are in that position?
Yep. So, I mean, they're going to have to kind of work with lenders that are matching up with one another, obviously, because like us for a lender, we could, sometimes close loans in 20 days, 30 days, and then there's some lenders that are 45 to 60 days out. So, depending upon how quickly they're ready to get it done, they could have it done within 30 days easily.
Absolutely.
Yeah.
So we always recommend to our buyers too, just in case, that they plan their listing closing the day before their purchase closing.
Yes.
If they can, pop in a hotel for the night or an Airbnb, or maybe they have family nearby or great friends that would host them for the evening, because sometimes you guys need information from the closing before.
Yes.
In order to process the new purchase.
That's right, because we have to verify the funds that you're going to be receiving from the sale, and we have to verify that sale was finalized before you can take on your new purchase.
Absolutely. Mm-hmm. Well, Kristin, we so appreciate you answering our buyers' questions today. Are there any last-minute tips for our buyers out there in the Triad that are considering a home purchase this year?
Wow. Last-minute tips would be don't wait, because the mortgage market right now, the rates are extremely good. Prices are still good. Inventory we're working on a little bit, but it is definitely the time as far as rates are concerned.
Definitely. Well, we are so looking forward to talking with all the buyers out there this year. If you have any questions, feel free to reach out to Kristin, or our information will be at the end of this video. Take care, you guys.
See ya.